So in this chapter we'll be discussing about P notes. P notes stands for participatory notes. So this is a term which you hear a lot in respect of FII investments. So normally if an investor wants to invest in India, that means a foreign investor, if he wants to invest in India, they have to register with SEBI. SEBI is the regulator of the capital market. It stands for Securities and Exchange Board of India. Registration involves time, money and more scrutiny. So participatory notes are financial instruments used by investors that are not registered with SEBI to invest in Indian securities. Okay. So to invest in Indian stock markets without getting into regulatory approval process, FIIs trade P notes. So earlier we discussed about derivatives. If you recall, we discussed about derivatives. So technically P notes are derivatives with Indian shares as the underlying assets. So they are not used within the country, they are used outside India for making investment in shares listed in the Indian stock market. That is why they are also called offshore derivative instruments. So participatory notes are issued by brokers and FIs registered with SBI, registered with SEBI, that is brokers registered with SEBI, issue these instruments and make investments on behalf of the FIIs. For example, Indian-based brokers buy India-based securities and then issue participatory notes to foreign investors. And any dividend or capital gains collected from the underlying securities go back to the investors. So advantages of P notes are they can be easily traded overseas because they are very popular. They are very popular because investors can take positions in Indian markets anonymously. And also FI investors usually enter stock markets for short-term period. They don't want to get into this trouble of time-consuming KYC process and all. So that's why P notes are advantages for them. But the disadvantages are because the end beneficiary is not disclosed, many investors who want to remain anonymous use it. And because of the anonymity involved, SEBI will be having difficulty in determining the original owner. A lot of unaccounted money can enter the country through these P notes, and there are concerns that they are being used for money laundering. And short-term speculative traders from overseas can cause volatility in stock markets because they can move funds very quickly. So one point you have to remember is that it's not so easy to stop P notes, even though there are quite a few disadvantages, especially regarding to money laundering. FI inflows are very important to a country like India because they help the growth of the economy. Putting curbs on P notes will reduce FI inflows. Even if there is a talk of such restrictions, FI inflows will reduce. For example, in October 2007, when the government started talking about putting some trading restrictions on P notes, Sensex dropped by 1,744 points. So it's not a very easy thing to stop P notes. Okay, so we have to live with the disadvantages. So in this chapter, the questions need to be prepared are: what are P notes? Why are P notes called offshore derivative instruments? Because P notes are not directly trading the securities. Okay, the brokers buy India-based securities and then they issue participatory notes to foreign investors. So what are some advantages of P notes, disadvantages, and despite some disadvantages, why is it not so easy to stop P notes that we have discussed?